Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. Today I handicapped the FOMC and how the U.S. capital markets will react following their rate decision at 2:15 p.m. My first blip is predicting that the reaction low U.S. Treasury yields set following last week's surprise 75 basis point rate cut to a 3.5% federal funds rate will be the cycle low yields. The year-to-date low yields set on January 22nd are 1.843 on the 2-year, 2.396 on the 5-year, 3.283 on the 10-year, and 4.099 on the 30-year, which is a new bond conundrum low. Lowering the federal funds rate to 3% today would be a warning that the FOMC is ignoring potential raised inflation expectations. This will cause 30-year yields to rise. I also predict that the increased size of conforming mortgages to 729,750 from 417,000 will open up a huge window of refinancing. Loans above the current limit are about 100 basis points higher. The increased supply of to-be-announced or TBA mortgage securities in the open market plus a higher 30-year yield means that conventional mortgage rates are set to move higher, not lower. Higher mortgage rates will make it difficult to reduce extremely high inventories of new homes and existing homes on the market today. The housing recovery will be delayed, and the U.S. economic slowdown will extend beyond 2010. My second blip covers COMEX gold, NYMEX crude oil, and the dollar versus Japanese yen. COMEX gold reached another new all-time high at 933.3 on Tuesday. This week's resistance is 936.3. NYMEX crude oil held my quarterly pivot at 88.85 on Monday, but the upside should be well below $100 per barrel. A slowing economy will translate into reduced energy demand. For the dollar, annual support for the British pound is 1.9271, with my annual pivot at 105.86 on the dollar versus Japanese yen, and quarterly resistance at 1.5066 for the euro. This range for the dollar has been in place for the entire month. My third blip charts the upside remaining for the Dow, NASDAQ, and transports. For the Dow, the upside should be limited to my annual pivot at 12,670, with my weekly pivot at 12,340 as near-term support. The NASDAQ is below its weekly resistance at 2371, and today's support is 2283. The Dow transports are up 13.5% from the low set on January 22nd, but observe the downtrend on the chart. My fourth blip reiterates that community and regional banks are not done with their write-downs. The kitchen sink concept where all bad loans were revealed in Q4 earnings is a lot of bunk. 2 weeks ago I suggested that horrid Q4 earnings were factored into weakness that took the home builders and banks back to levels not seen since May 2003. This was before the housing bubble began to inflate and before toxic loans were originating. Despite even worse than expected earnings, the regional banking index, BKX, is up 22.1% from its January 22 low. But lower rates from the FOMC will not make bad loans solvent. New problems are all but certain in the months ahead. Send your comments and questions to support@rightsideadvisors.com. That's today's 4 in 4. Enjoy your day.